Understanding Jumbo Certificates of Deposit, CDs. A Jumbo Certificate of Deposit, CD, is a specialized type of savings vehicle that offers higher interest rates compared to traditional CDs in exchange for larger minimum deposit requirements. This financial instrument appeals primarily to investors capable of committing substantial amounts of capital, typically starting at $100,000. What are Jumbo CDs? Jumbo CDs are a form of fixed-income investment that allows depositors to earn interest on their savings while agreeing to leave their funds untouched until a predetermined maturity date. In essence, they function similarly to regular CDs but with distinct differences, most notably, their higher minimum balances and corresponding interest rates. Characteristics of Jumbo CDs. Minimum balance requirements. Generally, Jumbo CDs require a starting deposit of at least $100,000. Some banks may offer lower entry points, but this is less common. Fixed or variable interest rates. Jumbo CDs typically pay a fixed interest rate, which helps stabilize returns in an investment portfolio and partially offsets market risks. Term lengths. Jumbo CDs can have terms ranging from a few days to several years, with 3 months to 5 years being standard durations. Longer terms generally yield higher interest rates. Safety and security. Jumbo CDs are considered low-risk investments, as they are federally insured up to $250,000 by the Federal Deposit Insurance Corporation, FDIC, for banks or by the National Credit Union Administration, NCUA, for credit unions. The basics of certificates of deposit. A CD is a time deposit made with a bank or credit union that typically offers higher interest rates than standard savings accounts, provided the depositor agrees to leave their money locked in the account for a specific period. CD terms, which can vary, dictate the length of time that funds must remain untouched. Advantages of Jumbo CDs. While Jumbo CDs may seem tailored for institutional investors, such as large corporations or banks, individual investors can also benefit from their unique characteristics. Key benefits. Higher interest rates. Due to their substantial minimum investment requirements, Jumbo CDs often pay better interest rates compared to their traditional counterparts. This can make them an attractive option for investors seeking a steady return. Risk mitigation. The fixed interest from a Jumbo CD helps mitigate market risk, providing a buffer against potential losses in stock market investments. Collateral for loans. Jumbo CDs can serve as collateral for obtaining loans, making them versatile financial instruments. Disadvantages of Jumbo CDs. Despite their advantages, a few drawbacks should be considered before investing in Jumbo CDs. Considerations. Inflation risk. Jumbo CDs may not keep pace with inflation. If inflation outstrips the return on the CD, the real value of savings could diminish. Early withdrawal penalties. Withdrawing funds before maturity often incurs a penalty, making Jumbo CDs less appealing for investors who need liquidity. Interest rate risk. If market interest rates rise, those holding a Jumbo CD with lower rates may miss out on better investment opportunities elsewhere. Frequently asked questions, FAQs. What is the shortest term for a Jumbo CD? Jumbo CDs can have terms as short as a few days, but it is more common to see minimum terms of 3 months. Do Jumbo CDs earn a higher interest rate than normal CDs? Yes. Jumbo CDs usually earn higher interest rates due to the larger minimum deposits required. How much of my Jumbo CD is insured? Both the FDIC and NCUA insure up to $250,000 per depositor at each affiliated bank or credit union, providing significant financial security for investors. Jumbo CD examples. To illustrate current offerings, consider the rates from Veridian Credit Union as of August 15, 2024. 9-month Jumbo CD requires a minimum deposit of $100,000 and pays 0.4%. 15-month Jumbo CD requires the same minimum deposit and pays 0.5%. These rates can vary over time and may differ based on geographical location. The bottom line. For those with substantial cash reserves looking for a safe investment, jumbo CDs offer a compelling option. They provide competitive interest rates and security backed by federal insurance. However, potential investors should weigh the risks and benefits, especially concerning interest rate environments and liquidity needs. Before committing to a jumbo CD, it is wise to evaluate investment goals and consider other options if flexibility is a priority. In volatile interest climates, staying informed about market conditions can help investors avoid locking their funds into less advantageous rates.